Nothing wrong with that. Tons of people make a bunch of money doing it. But you also should look at alternate investments, and real estate really is the core of that. And honestly, it's the biggest investment in the world. I think it's bigger than the stock market, honestly. Total investments in real estate is somewhere in the 200 trillion range, right?
Welcome, my fellow Flow Masters, to another episode of the Cashflow Authority Podcast. I'm your host, Chris Jansen, founder of the Flow Authority, and this show is for high-performing professionals who did everything right: the degree, the career, the income, but still feels like there's just something missing, another level waiting. And here we explore how real estate can become that next challenge worth building, so you can take ownership of your future and create a life by design. Now today we're joined with a very special guest, Mr. Jason Ottilo. Jason is a real estate investor and co-founder of Next Legacy Group, a firm focused on acquiring and managing income-producing assets for accredited investors. Jason specializes in multifamily investing and has participated as an investor in 500 plus multifamily units, in addition to owning an RV park in Arkansas. His experience centers on strategic underwriting, portfolio diversification, and long-term cash flow growth. So welcome, Jason. So happy to have you here today.
Yeah, thank you, Chris. I appreciate that. Appreciate you having me on this. It's really a good opportunity to speak to people. It's funny enough, I run a call on Friday nights where I really try and just give back to people. It was weird, like I saw all these groups and everybody wanted 25,000, 10,000, 5,000 to join my mastermind. And I'm like, what if I was able to just do it for free and just teach people
Nice.
from my mistakes and stuff like that? So I love this format. I love this opportunity. So thank you.
Absolutely. That's awesome that you're doing that too. I'll have to come check out some of your calls.
Yeah, absolutely.
Nice. So
Absolutely.
yeah, maybe can you go a little bit into kind of your backstory and what led you into real estate, what led you into multifamily and scaling to your 500 units?
Yeah. So it's a great question. I don't know that I have the normal journey where, hey, I'm interested in real estate. I go to college for real estate. I do all that stuff. Honestly, I started working for a in the healthcare industry. So I worked for a company called Express Scripts. Honestly, I got the job because it was available. I didn't even have a college degree at the time, and it was just an opportunity that presented itself. And it ended up I was just making photocopies, and that 28 years later turned into I ended up becoming an executive within the company. But there was just, I had always wanted to be an investor, a stockbroker. As a kid, I always was fascinated with Wall Street. I grew up in New York, so we were right outside the city, would go in the city all the time. And I was like, oh, this is what I want to do. It didn't pan its way out for me. And then my wife and we had moved to Jacksonville about 2018. So we live in Jacksonville, and she became a real estate agent. And I had this great idea. I'm like, hey, before we buy our house, what if you just got your real estate license and we bought the house and got the commission and then use
Hmm.
the commission as the down payment on the home? And so she's okay. So she takes the 2 week course, she gets it. We buy the house and we get the commission. We basically put nothing down. So I'm like, wait a second. So there's creative ways here that you can actually purchase real estate.
Hmm.
So fast forward a little bit, COVID happens, and I really started exploring different ways to invest, started messing around with options and stuff. But I'm like, all this stuff doesn't make sense to me because it seems to be very manipulated, and I, it's just up and down, right? But what is not? And it's like real estate. It's like it's a physical building. I can see it, I can touch it, I can
Hmm.
hold it. So we went out and we were like, all right, let's go buy a couple homes and we'll do it that way. So we started looking and we found a couple homes, and I started just to do the math. And I'm like, okay, so I'll make $25 a month, and then I get the depreciation and I get this, and I still don't understand. I'm putting my credit at risk. I'm spending $100,000 to buy this property. Yeah, there's a return, and there's nothing wrong with it. I think people make a great living doing it. I just couldn't wrap my head around this is going to take a while. And I'm
Yeah.
like, there's got to be a faster way to do this. So it was funny. My wife was like, all right, we're going to skip that. It doesn't make sense. And she goes, what? I got this guy popping up on Instagram all the time. And she goes, he's a nut job. I don't understand. He's screaming and yelling and he's saying crazy stuff. And he talks about multifamily. I'm like, what's his name? He's like, Grant Cardone. I'm like, Grant Cardone.
Nice.
I've never heard of Grant Cardone. So we go
10x.
off. Yeah, you go, 10X, cash flow. I even saw your hat. I think I have
Oh yeah, this is the Grant Cardone hat.
that.
Yep.
That's right.
Yep.
And so we went to one of his webinars. We spent, I want to say, we ended up all Grant's webinars go over like hours. And I think we were in Starbucks for 4 hours listening to this guy. I'm huge notepad and I'm writing all these numbers down. I'm like, that makes sense. It makes much more sense that I purchased something that has 100 units in it. And if 5 people leave, I still have 95 people paying me. And the risk
Yep.
versus the reward. And I'm like, that's what I want to get into. So we immediately joined Cardone. We joined his group. We also joined a couple other masterminds. My wife had access to other platforms through her real estate job. And so we just started diving in full force. This is probably 21-ish, 2021. It was towards the tail end of COVID. In Florida, COVID didn't happen apparently. So we were able to do whatever we wanted to. But yeah, and then we just dove right in and it was learning and doing and learning and doing. And I think I hit a point where I'm like, all right, all this makes sense, but I feel like it's harder than what a lot of these guys are explaining. There's got to be more to this. It's find the property and people will give you money, right? Seems too simple. And sure enough, it really was broken down too simple. They were giving you the 10,000 view.
Yeah.
And so I started networking with people. And that's the one thing that was an absolute game changer for me. And it's really started to meet people. So at these Cardone events, Matt Tafiki, I don't know if you
Yes.
had
Yeah.
Matt on your podcast or not, but he was
I
one of
vetted
those
him.
people I ever met.
Yeah,
Yeah.
I'm sure he'll come on. He's a busy guy, as you are, as we are.
Yeah.
But yeah, yep. No Matt.
Yeah. He was probably the first person that I really connected with. And then I had invested with him in one of his RV parks. And then he just
Okay.
started introducing me to person after person.
Wow.
And then I met Jake Sisk and a bunch of other guys that were all trying to change the game. And so we just started connecting. And as we were connecting, like Matt and Jake get involved in this RV park. I'm like, I want to be part of that RV park. And so the three of us partnered together and we purchased this RV park down in Arkansas. There was a couple other opportunities where Matt and I were looking at car washes. And it's, oh, there's a car wash, but it comes with the real estate. So I get the real estate too and the
There you
business.
go.
And so he and I started working on that. And that's when I started to meet more people. And this whole game, I really started to figure out, is a networking game. And it's getting connected with people.
Yes.
And so we lead that all the way up to the next legacy group. And that was probably about 6 connections deep. And I meet my partner, Teresa, Tim, Laura, and we were like, hey, look, we can start a group where we have all this experience, we have all this know-how. We found a fantastic platform. It's called Investor, where basically you can set up a customizable fund, which allows you to basically allow people to invest in almost anything. So you get a very broad PPM, and folks can
Okay.
invest in real estate, they can invest in crypto, they can invest in it's almost like the Robin Hood of alternate investing.
Gotcha.
So you're my investor, you put in 100K, you're like, hey, put 10 in crypto, put 90 in real estate, put the rest over wherever. And it was just a fantastic platform. So we went all in, we set the platform up, and as we were doing that, we met two more partners, Mandy Monson, who it would be a great guest for you too. She's like the storage unit
Oh,
queen.
nice, nice. I love
So
storage. Yeah.
we partnered with her, and from a storage unit standpoint, we're like, hey, she'd be great to bring on the team. And then our last partner was Justin Bennett, and Justin owns a construction property management company, and he also has a ton of units. And so that allows us to be vertically integrated. And so,
Let me ask you this: do you ever get? Is it easy for you to get distracted with all these people who do all these different
yep.
things? And you talk
hmm
about the car wash too, right? And all and storage units and RV parks. Is it easy to get distracted with all the different types of real estate out there?
So I'm one of the guys that has great ideas, and I need people to do the details, right? Like I'm not the detail guy.
Yeah.
I have great ideas. And so for me, shiny objects, absolutely. I see something and it's like, oh, I want to go do that. And oh, I want to go do that. And oh, I want to go do
Yeah.
that. And that can definitely happen. And I was very specific on my partners. I needed someone who was detail oriented, which is Teresa on my team, Laura on my team. They're very detail oriented. They do. And they say, wait a second, Jason, we got to finish this project before you go on to the next one. And so it's
Yeah.
really trying to have folks that are around you. My wife is the same way too, where they ground you back down to reality. Okay, why don't you finish one project, which is a great project, and then you can move on to the next one. But absolutely, I think from an investor and from a maybe entrepreneur, it's very easy to get distracted because
Yeah.
there's so much stuff out there. And
So
I
much
mean,
opportunity. Yeah.
with
Everywhere.
TikTok and LinkedIn and Instagram, like there's so many people coming out. Oh, buy businesses. Oh, do this. Oh, do
Hmm.
that. And you're just like, oh, that's a good idea. That's a good idea. That's a good idea. And so you just have to stay focused.
Yeah. 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 Even my good friend Xiao Yu, we both come from engineering. We met each other in engineering. I just quit my job. She's on her way out of her engineering job, but I'm going the real estate path. She's going the buy the business and optimize the
Yep.
business and sell the business path. And she shared some of her numbers, and I'm like, holy crap, what am I
Yeah.
doing? Why am I over here? I
Yeah.
should be over there.
Yeah.
But I don't know. There's reasons. I think if I went that way, I would be way in over my head, and it just
Yeah.
you can be successful in any of these avenues. By the way, it's just pick your poison and then go into it and get
Yeah. I
into
think
the
that's the kind of one advice I get. It's look, if you find something, just do it as hard as you can for as long as you can and put every
yeah,
bit of energy and love it too, right? If you
yeah,
don't love the real estate, don't do the real estate. If you like the businesses, do the businesses.
right,
I do love the real estate. I just find that we did a property walkthrough last week and just walking the property, going through every single unit, talking to the tenants. That to me is cool because you start to meet
mm,
the people that are going to be in the building that you're managing. And it really brings a human element to it. And it's okay, not only do I want to buy this, but I want to make it better for you because
yeah,
you're a person too. I'm a person too. Yeah, we all want to make money.
hmm,
That's great. But I also want to make it better for them, give them a better lifestyle in some cases.
yeah,
Because some of them were like, hey, yeah, there's a property manager here, but he never answers the phone, or when he does, he tells me it's my problem to fix. And he's like, I just stopped calling. And it's like, why? Your fire alarm is gone. Like it's wires hanging out of the ceiling. You don't care? Yeah, I gave up. And so really
hmm,
seeing stuff like that, I mean, like I want to make that better for them.
yeah. So that's another element to the gurus, Grant included, right? Like they don't
Hmm.
talk about the details. I don't know if Grant himself gets into the details. He's got his whole team
Right.
deal with that stuff. So
Right.
when you're boots on the ground, actually walking the properties. So like, how what is your role? Because you're not managing it. I'm assuming you're probably
Hmm.
not managing it yourself. So how do you make sure that the management you put in place will be more attentive and addresses those needs?
Yeah, I think it's like an interview process. So before we met Justin,
Yeah.
who actually has the property management team, it's really just getting to know the RV park. So in the RV park instance, one of our partners moved down to the RV park. And so I was like, oh, I feel good because you're going to actually be there. And
Yeah.
so he lives there now and he's been straightening
Wow.
up and he works with the property people that are there and he's going to get it to a point. Eventually he'll move out, but it was like I knew and felt confident you're going to be there. Cool. We're good. We don't have to worry about the people
Yeah.
that are there. And then in this property that we're trying to take down now, we actually met when we did the walkthrough. We met the people who are going to manage the property, and they were absolutely fantastic. We spent the entire day with them. We went to breakfast, we went to lunch with them. We had good conversations. We walked 106 units with them, walked around the property. We just saw how detailed they were, how they were actually helping some of the residents. Like one of the girls was like, "Look, if they haven't fixed this for you, don't sign a new lease. Just tell them you'll sign the lease when they fix all your problems." And she was really interested in helping these people. And so that was an indication to me that these are the right people. And it's very encouraging when you see stuff like that. So it's really interviewing your property manager people to make sure that they're on the same page as you.
Nice. Awesome. Okay, so if we go now into the underwriting aspect, and
Yeah.
you're raising money. You've got accredited investors that you're looking for to join forces with you and make these deals happen. So when you're underwriting the deal, like, how do you make sure, what do you implement into your underwriting process to make sure that your investors are ultimately, their capital's protected?
Yeah, I think the biggest thing that we started this year was really looking at risk. What's worst case scenario? So I buy this property, catastrophic event happens, I'm at 60% occupancy, the rents couldn't be raised. What does the property look like for the investor had something like this happen? So in the example of this property we're taking
Mm-hmm.
down, we brought it all the way down to as far as we can go. And so we can go all the way down and still secure your capital at 66% occupancy with increase to expenses and no rent increases. And so
Wow.
we're like, okay, great property.
Yeah.
Probably not going to lose 40%, 40 people and not
Yeah.
be able to fill those units. I'm probably not going to
That's
not
great.
be able to raise rent, but if I couldn't, and so we actually pitch that to them and say, hey, look, this is what we look at, data. We look at tons of data, and the data for this market that we chose says that rents will increase year over year for the next 5 years, just based on data that we've collected. And then two, worst case scenario, what happens if we have a catastrophic event? And for some reason, because we don't know how to manage the property, or we've left, or we've gone over, your capital is actually protected because we can lose 40 people and you're still going to be able to retain your capital if we sold the property as is.
That's great. Yeah. Do you do that on every deal? You basically look at, it's almost like, what's the worst case scenario?
Yep.
If everything goes wrong, our plan goes to hell. This is our
Yeah.
break even. It'd have to get this bad for you to just not
Yes.
lose money, for you to
Yeah,
just
we
get your
actually
money
have.
back, right?
Absolutely. We have a break even slide, and then we have a risk assessment slide that we do in our pitch decks. And so we can show the investors, like, look, here are the
Mm,
numbers as is today. We've done nothing. If
yeah,
they went to break even, we can sustain this property at 66% occupancy. And then
got it.
the same thing with the risk assessment. What does the market look like? What does this area look like? What is the potential growth? And so that kind of
Mm.
shows them like, okay, this area is a growing area. And it's all data that's available that's free, right?
So where do you get that data? Because I know a lot of investors will use CoStar and things like that, which is very expensive, I've recently
Right.
learned.
Yes, extremely expensive.
Do you use something like
Um,
that? How do
so we
you,
do. We
yeah.
do. We have CoStar. So oddly enough, we got a really good price on CoStar. It is obscenely expensive if you were to pay the regular price. It was a deal of a friend kind of thing.
Okay.
Hey, so we got a really good deal on it. So we're able to have access. So we have access that way. A lot of times you can go to whatever state you're in. You can go to their city and kind of pull a lot of this data from there. So there's a lot of
Hmm.
places that we would go if we're looking for something specific, but CoStar is definitely one of those tools that we utilize to pull a lot of that data.
Nice. Yeah. And look, I'm not saying it's not worth the money. It
Right,
seems expensive, but it might be totally worth it. It just depends what you're doing.
right,
I started, me and two guys that I met, one of them I met at 10X Coaching Mastermind in Miami, and he's in Dallas. I'm in California, but I'm actually moving to Dallas. We're partnering and starting a company out there to develop land because he's built before, his partner's built,
right.
and I'm an engineer. And so, anyways, CoStar, the second I posted that, hey, I quit my job and started this company, immediately got a call from them, right? Oh, that's so amazing. Let's jump on a
Yeah,
call. And I know it's cream of the crop. This is the good data. We want to eventually get into that. But I don't know. For us, I'm like, hey, starting out, like, we know other brokers who have CoStar, so if we need to pull a
hmm,
report, we can pull a report. But I'm like, just to do one deal this year, probably, it's a hefty fee. But for some
yep,
long term, we want to get in there. We want to start doing multiple deals a year, and,
yep.
and then it starts to become definitely cost effective, and you have more control over it. But yeah,
And I
awesome.
think that's the key right there. I would now never tell a new person like, "Hey, go get CoStar and pay
Yeah,
$25,000 or whatever ridiculous price they want." Right?
yeah,
I would say, "Hey, look, build yourself up to needing CoStar. Then it's a useful tool for you." And
yeah.
totally side note, one of our GPs on Next Legacy Group is also an engineer,
Oh,
and we
okay.
love engineers. We call him the funny engineer because he's got a ton of jokes. Which that's the joke because he's funny. But he does a lot of our underwriting because he's just so
Yeah.
detailed.
Very.
That's like his niche, and he just loves to do it. And he's
Mm.
got his own, like, he's using someone's program, but he's modified it to the point where he's got it really dialed in.
Yeah, that's very cool. I pretty much use spreadsheets. That's
Yep,
I don't trust anything
loves
else.
them.
Even yeah,
Yes,
even in the engineering, like I just there's softwares and we'll use them, but when I first started, especially, I'm just like, I'll
yeah.
just do it. I'll just build out my own spreadsheet to do that. It's
That's
simple,
so
right?
funny because that's what he
Yeah,
did. Like he took somebody's spreadsheets, but this cell here is broken and this formula doesn't work, and
right.
he changed it all up, and it actually got it better. Like it
Yeah,
really dialed in. This person did a great job with their spreadsheet, but Tim really just dialed it in to a point
yeah.
where it's like it works.
And each deal's different. It's
Hmm.
hard to have a one size fits all tool.
Right.
Yeah. Awesome. So when you're talking to accredited investors, I'm sure there's most of these investors, they're not investing every day. That's why they have you to go find the deals and
Right.
explain what's going on. So what are some kind of maybe what's like the biggest misconception or misunderstanding that goes through the minds of the investor that you're probably at this point used to just explaining away?
Right. So raising capital is what I would tell everybody is the hardest part about all of this, right?
Yeah.
Because every
Mm-hmm.
investor is different. Every person is has a different why. And you really
Mm-hmm.
need to understand what that why are you doing this, right? Some people are looking to retire, some people have extra cash laying around. Whatever that is, whatever that reason is. What I find to be, I guess, the hardest part in really explaining to people is, well, what is this? What am I? Because people don't understand alternate investments. Everyone understands the 401k. Everyone
Mm-hmm.
understands the stock market. But when you start talking about, wait, I can invest in 100 unit complex, that doesn't make sense to me. Why? How can I do that? How
Mm-hmm.
does this work? And I think that's the disconnect that I would
Interesting.
love to teach people in high school. Like, look, stock market
Mm-hmm.
is not the only thing, and it you need to diversify your portfolio and look at multiple things. You can have some stocks and bonds. Nothing wrong with that. Tons of people make a bunch of money doing it. But you also should look at alternate investments, and real estate really is the core of that. And honestly, it's the biggest investment in the world. I think it's bigger than the stock market, honestly. Total investments in real estate is somewhere in the 200 trillion range, right? So that is the core. That is what everybody's investing in. It's real estate. And really,
Mm-hmm.
that's to me, you used to get paper stocks in the mail. Yeah, you own a piece of paper, right? I can know that I can drive down the street and I own that building, or I own that RV park, or I own that, or I own a piece of that. You can see it, you can touch it, you can feel it, you can live there,
Yeah.
which is completely different than getting a piece of paper sent to you, which they don't even do anymore, to say,
Which
hey, I
to
got a
me,
piece of that company.
you say people know 401ks, but when I started my job, all I knew is that I was supposed to put money in a 401k.
That's
That's all
true.
I knew. That's the way I'm
That's
supposed to
true.
do it. That's what everybody says. But then I get the 401k and I'm like, oh, there's all these funds. What's a fund? I don't even know what a fund
Right.
is.
Right.
What's S&P 500? What is this? What is that? And oh, just pick. You can just do your retirement, the retirement fund. I'm going to retire in 20 whatever year, and they'll just pick it for you. It's like you don't even have any clue where your money, all of this hundreds of thousands, eventually millions of dollars is going. And then with real estate, it's like you said, you can touch it. Like you can literally go
Yep.
to that property, especially if you know the exact property you invested in, and you can go there and see like how they're taking care of your investment. So I think
Well, and
that's
that's a
really
great
cool.
Yeah,
Yeah.
and that's a great point too, because you're right. Like maybe they understand they invest in the 401k, but what it's actually doing and going, and all I know is
Yeah.
that it goes up and it goes down. Okay, so
Yeah.
I always think of my dad, and he's when COVID happened, I got to sell everything. I'm like, you don't sell it now. It's not worth anything now. You just got to wait
Yeah.
it out. No, the world is ending, right? But that's the mindset of a lot of people investing in real estate. I don't even understand my 401k, so you want me to understand that I can invest in this? Is that real? And so it's really just talking them through like, this is
Yeah.
real. This is a good thing. This is something you're not going to lose your money, because they're so mindset in just give it to the 401k or put it in a savings account. no one's ever taught that you can invest in real estate or art or Bitcoin or all these other things that are actually out
Yeah.
there.
So I guess when you're, I don't know if you target, I know you're looking for accredited investors, but I don't know if you are targeting a certain niche market or something like that, or job title or profession. But are there, I'm sh it sounds like a lot of people you're talking to, you have to do some convincing as to why they should put their money in real estate. But are there groups of people out there that they just know, they already know they want to do it. They just want to find the right deal to put their money in. You get some of the easy low hanging fruit sales, if you will, on it.
Yeah, there's those what I would call sophisticated investors that call them. They know this. They know what they're doing. They know I'm going to invest in real estate. And to your point, they're really just looking for that deal that makes the most sense to them. Because some guys are looking for appreciation, right? They just need the money put somewhere and they'll deal with it 10 years from now. Or some guys are looking for cash flow because they're quitting their job, right? And they still
Yeah.
need income to come in. So therefore, that's what they're looking for. So
Yeah.
we definitely find those type of investors. Those sometimes are the easiest ones to talk to. As long as they
Hmm.
understand the deal, what they're investing in, it's really coming down to what's your why? What are you looking for? Because I have cash flow and appreciation in this deal. We can offer you both. A Grant deal, for example, he's buying an A property. You're mostly
Uh-huh.
getting appreciation in that.
Yeah.
He's got
Yeah.
the Bitcoin backing it up, and so it's the lottery ticket alongside of the real estate.
Yeah. And have you tried doing that? The Bitcoin hybrid strategy, or not really?
So I have, and then the other thing is tokenizing like real estate, where you basically turn the real estate into a token, and you sell the token. And so then I
Mm.
sell you the token for $5, right? And then you can sell the token to someone in China for $10,
Mm.
and that's another option too. It starts to get real complicated, and you got to work in
Yeah,
these
the legal
spaces that I'm
side,
not completely
tax side.
comfortable with. Yeah, but yeah, it's definitely something that people should start looking at because I think that's the future. Like I think everything will eventually
Yeah,
be tokenized, and then you get worldwide access.
nice. Yeah, because to me, when I heard Grant pitch the Boca deal, I think it was a year and a half, maybe a year ago at this point. But anyways, the first time I heard him, that was the Bitcoin hybrid,
Yeah,
and I was always fearful of Bitcoin because I just don't understand it enough. I'll be honest.
right.
I get the gist of it, but I'm not convinced. I don't do enough research to be convinced that it's just going to keep going up to infinity. Basically, a lot of these analysts are saying, and but when he pitched it, it's you're always going to still be invested in the real estate. So even if Bitcoin goes to zero, you're losing nothing. Your investment is safe, and you're going to still
Right.
make money. I'm like, wow, that's so the way explaining it that way is okay. Like you said, it's like a lottery ticket, but
Yep.
but it depends on your why. Because for me, I'm like, I need the cash flow.
Right.
That's what it's all about for me. So
Yep.
if all that's going to Bitcoin, if I just had money to just play with, which would be wonderful, then that would be ideal.
Right.
That'd be awesome.
Yeah.
Yeah.
No, it is. I spent a lot of time researching Bitcoin, so I do understand it, but I still see it as it's a lottery ticket, right? Could it go to
Yeah.
infinity? Sure. I remember looking at many years ago, probably 20 years ago, I was reading an article and I think Apple had hit $1 trillion, right? And the guy was like, it will never hit $2 trillion. Well, I think it's at 3 trillion now, or some obnoxious thing like that. Either case,
Yeah.
that's there. The opportunity's there. I think Bitcoin is it's an odd investment that it's hard to understand, but when you do understand it, it totally makes sense from a
Yeah.
monetary standpoint.
For sure.
Supply and demand, not a lot of supply, but
Yeah. And it's
big
tempting. It's
demand.
down when we're recording
It's
this. It's
big
down
time,
like
yeah.
45%. Yeah.
Crazy.
So I bought a little bit today. I bought a little bit just of it's a Bitcoin ETF because it's in
Okay,
my,
yeah,
my Roth IRA.
yeah,
I'm like, I'm gonna just put a little bit. I can risk a
yeah.
little bit for this.
Absolutely.
Nice.
Cool.
All right. So now thinking like long-term vision with your real estate, what does building a legacy portfolio really mean to you, and how should investors think about generational wealth through multifamily? And the context, to me, the context of this question is really like when I think multifamily, and this is actually still to this day a hurdle for me to get over is I'm still in like the duplex world and I love duplexes because the cash flow where I invest is just incredible. But I every time I go to the real estate summit, Grant sells me on multifamily. I'm like, oh, I'm done with the
Yeah.
duplexes. I'm going to But one of the things that gets me is like they're only underwriting the loan for, or they're doing the 5-year terms. I'm like, okay, what if in 5 years the interest rates go up? What if in 5 years something happens and I can't refi and I got to bring a bunch of money, or the investors all want their money back? So that, to me, that's like a fear of mine. And I know it's just, obviously people make tremendous wealth in real estate and multifamily.
Right.
Curious to get your thoughts on that, and also just the idea of building generational wealth with multifamily.
Yeah. Yes. Look, the market is no one. If anyone ever tells you, look, they know what the market's going to do. Hey, look, it's going to crash. It's not going to crash. I think Ray Dalio is right now saying that the entire United States is going to collapse. But then I was watching another guy, and he said Ray Dalio has actually been saying that since the 80s. And he basically pulled up all the articles of Ray Dalio. I mean, if you say the same thing over and over again, eventually you're going to hit it.
Yeah.
I don't necessarily know anybody can predict the future.
Yeah.
But to your point, real estate kind of runs in a cycle. And so, yes, in 5 years, so I buy a deal now, 5 years from now, what does the market look like? I don't know. And so one of the things that we try and do is we try to build in a flexible timeline. So we actually say 5 to 7 years. So we structure our deals while we have a 2-year flexibility in there, so that in 5 years, my goal is to sell the property. But to your point, the interest rates are through the roof. I can't get the price I want for the property. Guess what? I hold the property. My loan's not necessarily due. I can keep the interest rate I'm at. I still got 2 more years on my loan. I'm just going to sit here and watch this happen. And so then over that 2-year period, maybe in year 6, it looks really good. We're good to go. We sell the property. And so we build a flexibility in there so that we can pivot when we need to. And it might be before 5 years too. Like we really just, our goal is just to, in that 7-year period, to just watch the market and see where it goes. And if it signals to us, hey, look, you got to dump this property and pay back your investment and make everybody happy, that's what we'll do. So that's how I see and try to drive that fear away, so that I can say, okay, sure, that's possible, but so is the possibility that interest rates go to 0 too, because of the way the system works, and then I can make a bunch of money. So I guess it can go in either way, and so we just build that flexibility in to mitigate the risk.
So what if the rates go way down and then it actually makes more sense to refinance and just hold it for another 5 years? Does that is that possible, even though you have the investors on board? And how does that work?
Yeah, no. If the rates were to drop and we could refinance because we drove the price of the property up, absolutely we would do that too. Return all your capital. So now you're in the deal risk-free, right? So it really doesn't matter at this point. Everybody's risk-free. You invested $100K. Gotcha. I just gave it back to you, right? So now you're in the deal risk-free. So now you own this property that's cash flowing like a beast, and you got your capital back and you've invested into something else, and you're just happy. Right. And then it even gives us more flexibility because everybody's already been returned their money. Yeah. Plus they've been cash flowing for the last 5 years. So that would be the ultimate goal, right? If you're watching it, you can refinance, get them their money, and then still give them cash flow. Keeping the property forever is not in our plans. Again, depending on the market, it could change. Maybe our plan is to keep it. But we want to kind of recycle these and do another one and do another one and do another one, which kind of leads into that legacy mindset. Like, I think each of us on the team all have the same mindset. We're all around the same age. And so we're like, look, we want to do this for so many years, and then we want to enjoy our lives and our families and really have enough in the bank to say, hey, look, I don't need to be a $4 billion Grant Cardone. That's a great goal. I don't need to be that goal. I just need to be, hey, look, I have enough money for me to live out the rest of my life. I'm good. And then whatever's left, I can pass down to my kids to give that generational wealth. And then they'll have a little bit of seed money to build their own legacy. Yeah. I think all of us are in that same spot, and we're like, look, 10, 15, 20 years of doing this, and then we're kind of, all right, we got it. We're successful. Our investors were happy. Everybody was happy, and we move on. It's how I see like my legacy, and then most of the group is in the same mindset.
Yeah, it's just, for me, it's a mindset shift because I'm with the duplexes and all that. I got nobody else. It's just me owning them. So it's like, I just hold the thing, take care of it. Right. But
why not?
But I'm leaning toward now, like, if I like the duplexes and they're paying me good money, just keep doing that, and then add multifamily.
Yeah.
I can do both.
Yeah, 100%.
Especially now that, like you did, you joined a group together, and now you're a team, and it's not just one person, it's a team going out there finding deals, analyzing deals, raising capital. So I feel like maybe that's a good strategy for most of us, right? Who just, I'm sure there's people who do it by themselves, but I don't know. It seems like real estate, just generally, if you want to be really successful, you need a team of people around you, one way or another.
100%. I would not be as successful as I was if it wasn't for a team of people. It is this property we're doing right now, like all six of us have a role and we all are doing something. And I would never be able to keep up with everything that's going on because there's legal conversations, there's loan conversations, there's investor conversations, there's running meetings, there's pitching deals and marketing and LinkedIn and Instagram, and you get all this stuff and it all has to be done. Not, I'll do that tomorrow. No, it all has to be done today. So one person, I think it would be very difficult, and good luck to that person. And if they are successful, I want to know what their secret is.
For sure. Because people will look to Grant and be like, look, he did it himself. He'll be the first to admit he didn't do it himself.
He did not.
He gives props to his team.
Yes. And he's got a very large team now, and so he can really rock it, and then he can just focus on pitching the people.
Yeah, for sure. Awesome, Jason. It's been fun, and nearing the end here, but before we wrap, where can people find you, connect with you? I think you're doing, I don't know how much you can say about it right now, but I think you've got a deal you're working on right now. So if anybody's out there, investors out there, how do they get a hold of you?
Absolutely. So you can reach me at jason@nextlegacy.net. You can go to our website, nextlegacy.net. We do have an active deal that folks can invest in. It's a 106-unit property in St. Louis, Missouri. Fantastic property, low-risk property. Love the deal. Honestly, it's so funny. We went under PSA in January. The more and more I pitched the deal, the more I've been there, the more I love the deal. And so very excited about the deal. So they can reach us there at nextlegacy.net. You can reach any one of the six of us on that website as well. Feel free to reach out anytime. Open all the time, 24/7, 3 o'clock in the morning. I'll pick up, I swear. Maybe.
And you're East Coast, so I appreciate you staying on late.
Absolutely.
So, all right.
Cool. This was awesome. I really appreciate you. I love this format. I love the questions, and the hat's fantastic.
Definitely. Same to you, man. Appreciate your time, and we'll stay in touch and maybe do some deals together in the future.
Absolutely. Thank you, sir.
All right, thank you. Thanks for tuning in to this episode of the Cashflow Authority Podcast. We hope the insights shared today help you take the next step toward optimizing your finances and building sustainable wealth. If you enjoyed this conversation, please take a moment to subscribe on your favorite podcast platform and leave us a review. It helps other entrepreneurs and investors discover the show. And don't forget to catch the next episode for more insights. Until then, keep mastering your cash flow.